Hello and welcome to Pro Trader Strategies market commentary for Friday, November the 22nd. My name's Eric Wilkinson, and yes, you may very well recognize me as the Wolfman from mainstream media, but I'm here to talk about not only the markets and the economic data, how that's going to affect the markets, but options and how to implement that into your portfolio. All right, I talk about every single trade I do, when and where I put them on, and when they go against me, we really talk about how to manage that risk. All right. But this is the day that we've been looking for about a month now, because we got in some of the most important economic data in my mind, because it's very forward looking, and that comes in the form of flash PMI. And those numbers are the most important numbers for across the pond, and PMI, which is Purchasing Managers Index. Here in the United States, we did get our own flash PMI, but we really look at our ISM, which is the Institute for Supply Management PMI. Still good to look at for our economic data, though, too, just to give us a picture as to what maybe the ISM is going to be as well. So remember, anything above 50 is expansion, anything below 50 is contraction. And without further ado, let's get on with the European flash services PMI coming in at 52. It was expected to be 53, but it was actually it was 52.9, so in line with expectations there. One thing to note, we did get German GDP coming in at 0.1%, and then back to the European flash manufacturing PMI coming in at 51.6, expected to be 50.9, so slightly better than expected there. We also got the German flash manufacturing PMI coming in again at 43.8, although that is higher than what was expected at 42.9. That is basically the entire year so far that has been in contraction across there. Then we got the German flash services PMI coming in at 51.3, expected to be 52. Last month's number was revised up slightly from 51.2 to 51.6. Now remember, German and French are the main manufacturing sectors of the European region. So the services is a good number there, still above 50, but we're really looking at that manufacturing number coming out of Germany, which was pretty lackluster again, being below 50. We got manufacturing PMI out of the European region. The first PMIs that I talked about were the French PMI. So French manufacturing PMI came in at 51.6, slightly higher than the 50.9. Now the greater European region for Europe coming in for the manufacturing PMI 46.6, expected to be 46.4, so in line with expectations there. European flash services PMI 51.5, it was expected to be 52.3. Again, Great Britain's manufacturing PMI below 50, coming in at 48.3, and that was lower than what was expected at 48.8. Then the services PMI also below 50, coming in at 48.6. It was expected to be 50. So contraction almost all the way across the board there in the European region, aside from the manufacturing in France and French doing rather well, because both those services and manufacturing PMIs coming in above expectations. We did get our flash manufacturing PMI that came in at 52.2 and expected to be 51.5, so better than expected there. The services PMI coming in at 50.6, expected 51.6, expected to be 51.2. University of Michigan consumer sentiment coming in higher than expected at 96.8, expected to be 95.8, and inflation expectations out of the University of Michigan coming in at 2.5%. So here in the United States, our economic data continues to look pretty good. Forward data looking good as well. Europe still kind of struggling to keep their head above water over there, and actually not doing that quite well at all. Now, how does that affect the overall markets? Well, we would expect that if the European region is not doing so well, that there is going to be a lack of demand for crude oil. Well, we're seeing that. Finally, crude oil is starting to break a little bit. Yesterday, blasted above that $58 barrel mark. We talked about that. That was going to act as a bit of resistance, but anytime we see it bumping up against that several times, on the floor we used to say third time through. Well, that was the third time through. We got busted through that, went up and looked like we were going to test that $59 a barrel, and we talked about that 59, then 60, or those two lines in the sand that we come up with. 60 being the psychological level, 59 actually lining up with a Fibonacci, the 38.2 Fibonacci. We're seeing that weakness now back below $58 a barrel as we speak. I'm kind of expecting this to, again, go into the mid to lower 50s. All right, so I don't have any positions in crude oil, but that's kind of where I expect crude oil to move to. We've got gold pretty much unchanged on the day. I've talked about, I think that gold is going to migrate back towards that 1,500 troy ounce. That being said, we're seeing more weakness today than I would expect, but that was, follow through from yesterday's weakness. That weaker dollar should drive gold higher. Bonds moving up slightly and testing that 160 handle again. We've talked about that. It's toggling back and forth on that 160 handle. That is going to be a pretty major bone of contention between the bulls and the bears. The camp that thinks the Fed is going to continue lowering rates should drive bonds higher. As you lower rates, price should go higher. And the bears, obviously, that think that the economy is doing well and think that our mandate for the FOMC should be about here in the United States. Well, that being said, the United States showing up in that flash PMI number is doing okay. Europe not doing so well, and the Fed has talked about a global mandate on these interest rates. Trump obviously wants interest rates much lower because then that weakens the dollar, and I don't know if he's going to get that. I don't think the Fed is going to cut for the remainder of 2019, but 2020, it's not priced in for the first half for the most part. I think that we probably will see another rate cut. All right, we've got the VIX coming off just a little bit out of the teens again, but just slightly below that. If we see much weakness in the equities, we might actually see that VIX move higher. Now that 9-day moving average in the Dow Jones was breached. That is a bearish signal, you guys. We are below that 9-day moving average right now, but the equities on the other side tried to get above that 9-day moving average and didn't get there. You can see the Nasdaq is in negative territory. So like I said, it looks like if we settle below that 9-day moving average, we are going to start seeing more weakness come into the equities. And I think that that's what we're going to see. So it looks like we should come back down and test 81.65 in the Nasdaq at least. And I think that we might even peel back down into the value area and test the 9-day moving average like I talked about yesterday. All right, E-mini S&Ps, we got down 1 point on the day. And again, they struggled, maybe got above that 9-day moving average, but I would almost say that we settled below that 9-day moving average, because the way that the other charts set up as well, and expecting a little bit more weakness to come into the equities going forward. All right, we've got the E-mini S&Ps here. Again, this is a 30-minute chart. Gray section is the overnight session. The blackened area is the day session. And you can see coming into today with the economic data across the pond really causing the weakness here in the equities. So we're seeing them start to roll over and very near the lows of the day. It looks like we're easily going to print that overnight low that we saw as well. We could see that by the end of this webinar, or this video, as a matter of fact. All right, I wanted to throw out Tesla here because Tesla revealed their new truck. And to be honest, my kids, that's who he's supposed to be targeting. And my kids were like, what the heck is that? Not quoting them because I can't really say what they said on a video. And not seeming to be a big hit on the street as well. It's pretty funny. He actually had some armored glass, supposedly shatterproof glass on there, and they threw something at the first window and it shattered. Well, so he was like, well, that one didn't work. We must have over tested that one, and it finally met its breach point. Well, they traded on the back window and it shattered as well. So didn't work out too well, and we can see that that is causing Tesla to be down over 5% today. All right, let's talk about the trades that I've done, and we're going to move over to McDonald's. McDonald's, seeing a little bit of weakness. Remember, I got long McDonald's at 200, and that was basically on their earnings. Now I'm looking at trying to manage this risk, lower my basis on it, and maybe even dollar cost average, right? So I had sold the 200 calls against that, covered those. Then I went in right after this happened, sold the 185 puts in there, sold those for 29 cents, bought them back for like 8 cents. So a nice collection of 20 cents, lowering my basis continuously. Well, we're seeing this weakness, so I decided to go back in there and sell those 185 puts in there again. Why am I selling those 185 puts? Because if I put that stock at 185, I'm going to be averaging myself right here in and around this 195-ish handle, probably 192 and a half really is kind of where I'm going to be dollar cost averaging. That would have to go down and hit basically this point of control, which I think was, that was built out from the beginning of the year. I think that that's going to be pretty unachievable. I think we may go down and test 187 or something like that, but the 185 puts being way down here, I'm pretty confident with dollar cost averaging at that point for sure. So I was able to do that and collect another dollar by selling those puts again. So this is the second time around with selling the 185 puts in McDonald's, and I will be happy to take it on at that point as well. All right, so that's all I've done so far today. Just doing some mechanical work with my portfolio, trying to lower the cost basis on McDonald's here and keeping an eye out for the weekend. So I hope everybody has a great weekend. We'll check you back out on Monday, and if you can't take that, take it easy.